Joining us now to discuss is Tom Dunleavy. He's the crypto strategist at Dunleavy Investment Research. Tom, we're seeing Bitcoin went on a tear yesterday. It's coming back down from those levels, but there's still some concern in the stablecoin market. So, well, first of all, let's get your thoughts on Bitcoin and your outlook there.
Yeah, so I think we have to start with the equity side. So we had the Fed take action to backstop the banks, as Lynn went through just a minute ago. The CPI number yesterday was generally fine. The markets looked through that, and we had equities rally to the upside. In my view, that was short covering, repositioning, a lot of puts rolling off after CPI. Bitcoin, as we know, has largely been correlated with equities. So seeing Bitcoin rally in kind of that environment is not very surprising. What is surprising when you see a day like today, you have markets sell off sharply, Bitcoin sort of hold level, and also outperform markets on the upside in those last few days I mentioned. So for me, what is contributing to that? It's really liquidity conditions. We continue to see the TGA coming down. That is making liquidity conditions more broadly in the markets improve. We had a ton of short liquidations in crypto. 142 million in BTC was liquidated the last few days. But more broadly looking forward, and where I think BTC can really shine, is the recognition we're getting from everyday people now that the monetary system is not always stable, and BTC is an outlet that you can store your capital in that environment. We've received, a lot of pushback saying BTC is not an inflation hedge the last few years. And I think folks are generally right. It's a debasement hedge. It's a hedge against the financial system. And you're finally seeing folks start to allocate in that way. If you look the last few days, you've seen bank stocks notably sell off sharply and BTC go up, which I think is a very positive sign for BTC's long-term outlook. Really a great sort of indicator where folks can start to think about it in a portfolio as it rallies alongside other safe haven assets like gold.
Circle issued USDC's inability to hold its peg against the US dollar 3 days ago, sent investors fleeing. The drop in USDC supply started as the stablecoin issuer's ties to embattled Silicon Valley Bank became apparent, and the banking industry seemed to be nearing a meltdown. How is the stablecoin markets weighing on the crypto markets?
Yeah, so during those few days, it was extremely tumultuous. We had USDC depegging down to 86 cents on the chart you see there, and actually hit 80 cents in some places. You not only saw USDC go down, but DAI, which is collateralized 50% by USDC, other coins that are associated with that, Maker and others, sort of went down on the listed exchange side. Even within DeFi, we had some issues. If you look at, sort of the three pool, looking at Curve, you had mass depegging, USDT was withdrawn, and USDC and DAI were left in the pool, indicating that is where, folks found safety is in USDT. So we've seen a lot of turmoil in those markets. They're starting to settle down. Assets are coming back to their pegs. All liquidations across DeFi protocols with these underlying assets have worked themselves out in an orderly fashion. And going forward, I think we can expect to see some more regulation around stablecoins. And I guess what my bigger worry is, we were going to get some sort of potential regulation around USDC this year. I think regulators could look at this and say, wow, these assets have the ability to materially move away from their pegs. Is that something we need to further look into and put more punitive regulations around there? But, going forward, I think stablecoins are going to be the area to watch, and still the biggest use case of crypto, especially outside of the US. So very important.
So let's take a look at Bitcoin's dominance rate. It's reached a 9-month high of 45.5%, according to data from TradingView. Do you think that this is a flight for safety to, almost get away from stablecoins into Bitcoin, or because the Fed and the Treasury Department has showed its willingness to save Silvergate as well as Silicon Valley Bank, it's risk on again?
So I don't think it's risk on again. And more broadly, if you look at the longer tail of crypto assets, that's sort of showcasing it. We aren't seeing those assets rally as fast as Bitcoin. I think really this is Bitcoin decoupling from the rest of crypto the way I think a lot of Bitcoin proponents have always wanted it to be. Bitcoin, the store of value, the hard money, the safe money, and then you have crypto, Ethereum and all the other smart contract based platforms that are, more tech plays. And Bitcoin is really solidifying itself as a flight to safety asset. Now, this is one event, and it's one event which showcases Bitcoin's potential place in a portfolio. But I think we need to continue to see Bitcoin perform this way in the future, to have allocators start to actually put it in portfolios in this way, which in my mind is the most meaningful thing. If you have an institutional allocator who says, okay, I understand Bitcoin is volatile, but I know that it's anti-correlated during sort of these market events, that provides meaningful value to those allocators and has them rethink Bitcoin in a new light. So that's what I'm most looking forward to, is what happens when we see more of these events. But so far, I think Bitcoin dominance is really just that flight to safety you mentioned.
All right, Tom. Thanks so much. That was Dunleavy Investment Research crypto strategist Tom Dunleavy.